Welcome to the Phoenix Real Estate Week in Review for the week ending September 21st, 2019. My name is David Meek, Arizona Realtor and Real Estate Broker, and this is the Arizona Report. Well, in Metro Phoenix, we are still firmly in a seller's market where buyers have to move fast and bid near asking price, especially in the lower and the mid price ranges. However, just in the last month, the crazy pedal-to-the-floor price appreciation that we experienced over the summer has eased. Now, we're still clipping along above the speed limit in favor of sellers, but we've eased off the gas and switched to cruise control. According to Michael Orr's Cromford report, quote, sellers remain in charge, but their advantage is no longer increasing. The area showing the most rapid softening of buyer demand this week is Cave Creek, but like all other areas of the valley, it's still firmly under sellers' control. Avondale remains at the top of the list for the most imbalanced real estate markets around the valley. Avondale simply needs more homes for sale. It's as if buyers were standing overnight on the sidewalk waiting for more homes to hit the market, and sellers were turning the porch lights off. Housing supply is down across all areas of the valley, but most notably, supply is down in Avondale, Peoria, and Tempe. From the Phoenix Business Journal this week, personal finance website WalletHub ranked the top 20 cities in America to buy a home. Gilbert ranked number 14. The study compared 300 cities of varying sizes across two metrics: real estate market strength and affordability and economic development. In that same study, Chandler was number 63, Tempe was number 69, Phoenix 123, and Scottsdale ranked 156 on the list. Now, the top two national spots were Boise, Idaho, and Frisco, Texas. Nationally, buyers are optimistic. Fannie Mae's Home Purchase Sentiment Index, the HPSI, hit an all-time record high of 93.8 in August 2019, after edging up 0.1% from a previous survey high. The new high watermark is driven by the low mortgage rate environment and the sentiment among home buyers that there will be continued downward pressure on mortgage rates. So buyers are optimistic. The Federal Reserve dropped the federal funds rate this week 25 basis points, 0.25%. But remember, that doesn't mean that mortgage rates will move in tandem with that decision or at all. The mortgage bond market moves independently of the Federal Reserve decisions. The Fed rates are short-term and the mortgage rates are long-term, like the 30-year fixed rate benchmark. Now, the Fed announcement and the subsequent drop this week was widely expected and has been priced into mortgage market rates probably for several weeks. In fact, mortgage rates hardly budged this week after the announcement was made. Mortgage rates are very close to a 3-year low and may go even lower with the macroeconomic events like Brexit and the Saudi oil refinery cruise missile bombing response just around the corner. Now to interest rates. Today, Bankrate.com for an Arizona purchase loan is advertising a 3.74% 30-year fixed-rate mortgage with a 3.84% APR. Now that's for a $300,000 purchase with 20% down and a 740 credit score. Your loan scenario may vary. According to Ellie Mae Origination Insight report revealed this week, the average time to close a residential purchase loan increased from 43 days to 45 days. Now, that's probably because the pipeline is filling with a whole bunch of refinances and wait times are increasing. The same report detailed the split of mortgage types that buyers are currently seeking nationally. For August 2019, 69% of the home loans were conventional, 17% were FHA, 10% were VA loans, and 4% were other. So that just about wraps it up for me. This is the Phoenix Real Estate Market Week in Review for the week ending September 21st, 2019. My name is David Meek. For more about my thoughts on the Phoenix real estate market, be sure to check out my website, ArizonaReport.com, or call me here in the studio, 480-999-MOVE. That's 480-999-6683. Until next week, we'll see you then.